Call on Government Order of the Day number 4.
Taxation, Business Tax, Exchange of Information and Remedial Matters Bill, second reading.
The Honourable Michael Woodhouse.
Mr Speaker, I move that the Taxation, Business Tax, Exchange of Information and Remedial Matters Bill be now read a second time. This bill proposes a number of important changes to our tax system. The centrepiece of the bill delivers on the changes announced by the Government as part of Budget 2016 and proposes a major shift in the way businesses currently pay their tax, making these processes simpler and easier. It's important to the Government that these changes are sound and workable and deliver benefits to the New Zealand taxpayer, so I am grateful to the Finance and Expenditure Committee, so ably chaired by its Chair David Bennett, for their careful consideration of all the proposals in this bill and their recommendations for improvements. The bill is in better shape as a consequence. Mr Speaker, the key objective of this bill is to simplify taxes for businesses, in particular the process for provisional tax. So we're proposing to introduce a new calculation method to better match tax payments with income earning. The proposed new calculation approach, the accounting income method, takes advantage of technological advances to smooth the process. It more closely matches income earning with tax payments and reduces compliance costs for smaller businesses. Because tax will be paid as income is earned, businesses using the accounting income method will have more certainty that they're paying the right amount of tax. There's no intention to do away with the other methods for calculating provisional tax. The proposal is simply for the accounting income method to be a fourth option to calculating provisional tax. The bill also seeks to reduce or remove the application of use of money interest to a large number of taxpayers. Combined, these proposals will remove some 67,000 additional taxpayers from the impacts of use of money interest. For those using the new accounting income method who pay the required instalments, the use of money interest will also not apply. The bill also proposes flexibility for businesses that could trade their way out of debt. The bill proposes to reform late payment penalties by no longer imposing the monthly incremental penalty from new GST, income tax and overpaid working for families credits. The provisional tax proposals are part of a much larger program of changes aimed at modernising and simplifying tax administration in New Zealand. Viewed as a whole, the modernisation program will bring great benefit to New Zealand taxpayers and the economy by improving simplicity and certainty. But during the transition from current to new tax administration, flexibility will be required, allowing Inland Revenue to quickly overcome transitional issues. For that reason, Mr Speaker, a proposal was added to the bill at the Select Committee stage to provide the ability to use regulations to deal with urgent transitional issues. The intention is to avoid undue delays to the transitional process and to provide certainty for taxpayers. Introducing the proposal at that stage allowed the public the opportunity to make submissions on the matter and allowed the Select Committee to fully consider the proposal and submissions. Submissions to the Finance and Expenditure Committee on this point were focused largely on concerns about the breadth of the regulation-making power. Not all of those concerns, as outlined by media and the submitters, were that rational, and certainly this type of tool has been used many times before by this Parliament to ensure smooth transitions. It wasn't the huge Henry VIII provision that some had said. However, on reflection, the reading of the SOP could have been construed as much broader than was intended, and therefore the Select Committee considered those concerns and accordingly has made recommendations. The key recommendations proposed are that any regulations must be limited to issues that arise during the IT system changes, must not increase a liability and must not undermine the relevant rights of taxpayers. In my view, incorporating these recommendations achieves the objective of allowing IRD to respond to transitional issues, but by narrowing the scope of the proposal and building in further safeguards, it addresses the concerns of submitters. The second major component of this bill proposes enabling legislation requiring New Zealand financial institutions, unless exempted, to review their accounts and collect and report information to Inland Revenue on accounts held or, in certain circumstances, controlled by non-residents. When necessary, Inland Revenue will then share that information with other tax jurisdictions in specific countries. The objective is to help eradicate tax evasion. The legislation gives effect to New Zealand's international commitment to implement the OECD's Common Reporting Standard for the automatic exchange of financial account information in tax matters. It will ensure that New Zealand remains fully compliant with international standards for transparency and tax cooperation. Mr. Speaker, the overriding principle in this proposal is the desire to bring more transparency to international tax matters. This is also true for one other item in the bill, the proposed amendments to our foreign trust disclosure rules. While our tax settings are sound by international standards, the government is always open to making improvements to New Zealand's already strong tax settings if that is warranted. This is not a valedictory. That's why earlier this year we committed to act on recommendations from the Schuin inquiry to ensure our disclosure rules are fit for purpose and healthy. The proposed amendments to the foreign trust disclosure rules included in this bill will strengthen and help make sure that we maintain our reputation in the context of best practice of international exchange of information. The remaining changes in the bill are of a practical nature and ensure that the tax rules are applied consistently, that they're clear and that they achieve their correct policy purpose. In bringing the bill to its second reading, I again acknowledge the significant contribution made by the submitters and the committee to the clarity and practicality of the bill. In particular, the committee spent significant time with submitters in carefully weighing the context and controls of proposals introduced by the supplementary order paper, which would allow regulations to be made to facilitate the essential building blocks of inland revenue's business transformation. Submitters can therefore be assured that their concerns have been carefully listened to during open consultation, and the bill reflects the considered view of the committee that the proposals are sound. I commend this bill to the House.